thanks to the Post-Globalization Initiative for organizing and sponsoring this event. I would like to take a look at some of the long-term reasons for both the rise of the United States, its relatively short American century. In this case, I guess we're going to define a century as roughly 3 decades or 30 years. It wasn't a very long run. And in doing so, I think we will get some insights into what other countries can do to successfully develop and how we can create a post-globalization order. So with that, let me start with a brief survey of American history from the very beginning and looking at some of those factors that would ultimately create the American century. And again, when I'm referring to that, I'm thinking about a period of time that lasted from roughly the end of World War II up through to, say, the early 1970s. So let's take a look at how we got there. Well, the first characteristic of the rise of the United States was its anti-Europe bias. And we could see this embodied in our very first U.S. president, George Washington. George Washington, of course, is on our dollar bill, and he is this iconic figure whose reputation is almost never questioned in the United States. He is worshipped in an almost religious-like way. But one of the things that George Washington imparted in his farewell address to the American public after serving 2 terms as president, and this itself was significant, the fact that he left office, because many suggested that he should not leave, that he should just become a king. And George Washington was convinced that the kind of conservative counter-revolution that followed the American Revolution should not go so far as to create an imperial state in which he or anyone else would be the king. It should be a government in which we elected leaders and that they should rotate. Well, George Washington said, "Why, by interweaving our destiny with that of any part of Europe, entangle our peace and prosperity in the toils of European ambition?" Now, he had much more to say on this topic as well, but what Washington left us was a tradition that lasted for some 150 years of largely non-interference in European wars, which were far too frequent, and moreover, a legacy of maintaining very, very small peacetime militaries. So for most of the United States' history, we maintained extremely small militaries. We let European states bankrupt themselves by pursuing rivalries and wars and maintaining large militaries. And we instead built our real economy. That's where we focused our investment, not on a permanent military economy. Very different from Europe. Moreover, our early American leaders had a great distaste for European aristocracy and the idea of inherited privilege. They believed in actually making your own way in the world, and indeed, even some of the richest Gilded Age robber barons of the late 19th century maintained this view, and after collecting enormous fortunes by any standard, including today's, more or less gave all of their money away upon their death, rather than impart it to their children, who it was thought would just waste it away in various pursuits that would probably be not very good for them, nor the country. So these were the traditions of the United States that gave rise to a very powerful economy and, frankly, a very solid society. Continuing in this trend of those defining features of the early American Republic, we see this gentleman, who was on our $10 bill, Alexander Hamilton. He was our first Secretary of the Treasury, and in 1791, he put forward a very important written work that lacked a sexy title. In fact, it was quite dull. It was called The Report on Manufactures. And I find that there's kind of an inverse relationship between the attractiveness of a book's title and the quality of its contents. Well, the Report on Manufactures was Hamilton's defining statement on how the American economy should develop. Should it follow free trade principles? Hamilton said no. He said while he understood that perhaps there were certain ethical or moral advantages, in his estimation, to pursuing this path, that this was the road to poverty and prosperity. So contra Friedrich von Hayek's road to serfdom, Alexander Hamilton said that the lack, actually, of the state and its interference in the economy would be a road to poverty. And so Hamilton suggested that the United States put in place protective tariffs to support its infant industries. And the reason was that we lived in a kind of dangerous world, and Hamilton thought, well, we could be attacked by the British again. We would be in 1812. Or the French or the Spanish or these other aggressive European imperial powers, and best to have an economy that could produce the goods to develop our nation, our early republic, if so needed. So Hamilton put forward these ideas, and initially they were opposed by the South. It wanted to buy superior goods from the United Kingdom at the lowest price. They wanted, in effect, consumer-friendly policies. Now, Hamilton said this was very short-sighted. He said, no, you don't want this. You want to make people pay more in the short run for goods, to pay the cost of actually developing infant industries, and that this, in turn, would lead to development and eventually a very advanced economy. Well, in 1794, 3 years later, his ideas were accepted by the North. And one has to remember that the North had no comparative advantages in terms of economic development. Its soils were rocky, its climate was cold. There was nothing that would suggest that it would go on to become the leading technological, innovating area of the global economy. And it was in this context and environment of having no comparative advantages that Hamilton said you could construct a world-class economy, and did so through advocating the use of protective tariffs. Now, contra this idea that the United States has always somehow had a kind of a free trade regime, throughout the entire 19th century, the United States maintained some of the highest import tariffs in the world. In fact, after its Civil War in the 1860s, when the North finally prevailed over the South, it raised tariffs even further. So when there was no opposition from the South any longer, which were actually working to keep the tariffs from being as high as they possibly could be, the North raised them even far more, and American industry advanced and raced ahead. Now, this was made possible by several factors. One, it was a big country, lots of raw materials, big enough population so that you could have competing national enterprises, so that you would not just have monopolies. So there were some special factors at play, but it worked very, very well indeed for the United States. Again, transforming rural, bucolic, rocky New England into the core of the global economy. This little illustration at the bottom suggests that the United States' politics have not always been civil. The fellow that's pointing the pistol and firing it was the second vice president of the country, Aaron Burr, who, after making some insults about Alexander Hamilton's daughter, got challenged to a duel and was killed. Another important figure is Ulysses S. Grant. Ulysses S. Grant served as President of the United States after the Civil War. He served for 2 terms, and he ended up on our $50 bill. Now, Grant was under increasing pressure from the United Kingdom to lower tariffs. The States kept raising these things to promote national economic development, infant industries, and the United Kingdom was getting very irritated indeed with the United States. So after receiving many of these complaints from the United Kingdom, Grant responded with this rejoinder, in which he stated, thus, in explaining England's development, he said, for centuries, England has relied on protective tariffs, has carried it to extremes, and has obtained satisfactory results from it. There is no doubt that it is to this system that it owes its present strength. After 2 centuries, England has found it convenient to adopt free trade because it thinks that protection can no longer offer it anything. What he meant by that was that England was now the world's most advanced economy, and therefore protective tariffs no longer served its interest. Its interests, instead, were served by opening up other countries to free trade, or, in short, to British goods. He says, very well, gentlemen, then. My knowledge of our country leads me to believe that within 200 years, when America has gotten out of protection all that it can offer, it too will adopt free trade. Well, Ulysses S. Grant, if he was alive today, should have been investing in the stock market because he was an amazingly accurate forecaster of future trends. Now, his timing was a little bit off, but he got it exactly right in terms of what the United States would do. After the United States became the dominant economy in the world, after its technology was superior to all others, it too would shift to a free trade regime and push others to strongly follow in that direction. Other nations began to see the advantages of moving in the opposite direction of the United Kingdom's advice on free trade. Again, Latin America, for the most part, throughout the entire 19th century, persisted in following British free trade doctrine and only remained underdeveloped for it. Nations that departed from it were Germany, with its German historical school of economic development, led by people such as Friedrich List, and then Japan. Japan's move towards industrialization was one that happened in a very unique or distinctive way. The United States decided to visit Japan in 1853. Commodore Matthew Perry was the naval officer who did so. You can see these depictions of his visit to Japan, both created by the Japanese, and of course, an American photo of him. And Perry's object or interest in visiting Japan was as thus. Just as today, fuel is very important, thus it was in 1853 that fossil fuels were also very, very important. The steam engine had been developed, industrialization began to move apace because of it, and shipping began to be powered by it. Now, coal is very bulky, twice as bulky as oil in terms of the amount of energy that you get out of it. So ships had to make more stops than they do today to fuel up. Now, it so happened that Japan had something that the United States was interested in, coal. And the United States was interested primarily in engaging China in trade, but it needed a fuel stop. That fuel stop could be Japan. So the United States went to visit and to see what prospects there were for buying coal, and they discovered that the Japanese were not too happy or enthusiastic about their visit. Japan, for complicated reasons I won't go into right now, had been in a roughly 200-year-long period of isolation, had dropped behind the developed nations of the world, and again had this very rude awakening when this American could just show up with far superior technology and more or less tell them that whether they liked it or not, they were now open for business. And Perry brought all sorts of interesting things with him. He brought this kind of model railroad that was at 1/4 actual scale. He thought that would impress the Japanese. It did. And the Japanese response was interesting. Rather than just accept the idea that they needed to completely copy or emulate these foreigners, the Americans, and do exactly as they said, in terms of what it took to economically develop or to follow the United Kingdom. The Japanese took a very unique approach. They set up a think tank, or a policy institute, which their name, of course, is quite instructive regarding their attitude about Americans and foreigners generally. They termed it the Institute for the Study of Barbarian Books. So the idea was that they would learn from these barbarians. It was clear to the Japanese that these were culturally backward people that had very little to offer in terms of learning how to live, how to behave oneself, but they had great gadgets. And one needed to figure out how to make these things. So the Japanese, with the Meiji Restoration, beginning in the 1860s, got busy, and they started doing so. And they paid back the Americans' visit in 1853 with a visit of their own in 1941, which led to the destruction of the Pacific Fleet in Hawaii. A quite daring and quite impressive and successful episode in which the Japanese projected industrial power. Quite amazing when you think about it, because just a short 80 years before this, they were a feudal state, living in the most technologically primitive conditions. And within a very few short decades, they taught the United States a nasty lesson. Now, they still were not on the level of the United States, and their kind of cultural hubris didn't provide them with the perspective that they needed in order to determine whether it was such a good idea to do this. And so they didn't fare very well in that war. But nonetheless, it was quite interesting that they were able to develop so quickly. And of course, as you know, they taught your country a bit of a lesson as well in the early 20th century. So the Japanese were all about teaching people lessons at this time, and were meeting them out fairly regularly. We have a United States that was not, for the most part, busying itself with other parts of the world, Latin America accepted, which we kind of consider to be our own property for some reason. So we always had very small militaries, staying out of foreign affairs for the most part, foreign engagements, not spending lavishly on militaries. And we built the world's most robust industrial economy by the 20th century. Now, one of the problems with this economy is that as it matured, it had this tendency to move towards financialization. This led to some significant problems in the 1920s because the logic of the American economy was moving away from one of high wages and industrial development. And something that we should mention is that from the start, the United States had the highest wages in the world. The reason for this was because of the great interior or frontier that we had, which is kind of code for Indian lands that we stole. But this great frontier was always a place where the American worker could set themselves up as a subsistence farmer. So if working conditions were too rotten, you could just go take off and settle yourself somewhere on the frontier. This created, again, very high wages, which was a very good push factor for innovation and for mechanization in industrialization. By the 1920s, the logic of competition began to erode the desire or the logic of having a high-wage economy. Henry Ford, the great auto industrialist, understood in the 1920s that if people were going to buy his automobiles, they were going to have to earn enough money to buy them. And so he was an advocate of high wages in the American tradition. He imposed the $5 a day wage, which was a good bit of change for that time. But even with him, the logic of the system eventually worked to stagnate that wage, and he couldn't get it up any higher than that because of competition from other industries. And demand in the economy began to take the form of credit and of large speculative rents extracted in the financial sector from the real economy, which led to very gross levels of inequality ultimately instability, and then a crash of the American economy. The original response to the Great Depression was to impose austerity policies. I mean, this is what the liberal economic tradition said that you should do in response to a crisis. We had Say's law in economics, which more or less said that any economy will more or less restore itself, correct itself, if you just drive wages down enough to serve as an inducement to get employers to begin hiring again. But during the Great Depression, you had people holding signs on the streets saying they would work for food. They weren't even asking for money anymore. So Say's law proved not to be a law. It was inoperable. It didn't work. Similar problems happened in other parts of the world. In Italy, in the mid-1920s, there was a financial crisis, which was fought with austerity policies. Eventually, this resulted in Benito Mussolini taking power. Germany, it is often thought that Adolf Hitler came to power because of the Weimar period and the massive inflation, and that somehow the government just got carried away with printing money because they were indisciplined. Well, the history is actually quite different. The Weimar period and the high inflation of that time was more or less a calculated effort by the Weimar government to screw the French and the British, who were exacting these high reparation payments after World War I. So the Germans got the clever idea, we'll just inflate these debts away. We'll just flood the economy with so much money that these debts will be worthless. We'll show them. Well, all right, they did. But at some point, they ruined their own economy too, and then they imposed very strict austerity policies in 31, 32, and that created a lot of economic pain, and then this Adolf Hitler guy somehow came into power. Something similar in Japan happened. In the early 1930s, the crisis had spread to Japan, and they too were imposing strict austerity policies in an effort to combat this crisis, which was only making it worse. And eventually, the Japanese military kind of got tired of it, and they just decided to seize control more or less of the government, and we know what we got there. So, to quote the American literary figure Mark Twain, while history does not always repeat itself, it does have a tendency to rhyme, and so we should be quite concerned about this fire that we're currently playing with, which are austerity policies. Now, the United States took measures after trying all of the wrong solutions to correct the situation, and it began to do things like to regulate finance, pass the Glass-Steagall reforms, regulating the financial sector, separating commercial banks from other kinds of banking. It increased wages with the minimum wage. Now, this is quite bold. Think about this. Imagine if you're in an economic crisis, which is much worse than the one that we just experienced. There are all of these pressures to try and find jobs for people. People can't even find work if they're begging for food on the streets with signs, and then all of a sudden you propose, well, we have to come up with legislation to actually jack wages way up. It was very counterintuitive. Economists of the time hated it. But the American president at the time, Franklin Delano Roosevelt, was very pragmatic. He was not ideological at all, and he was willing to experiment. And so at first he thought austerity policies were the way to go. And like a reasonable person, once he tried them, saw that they didn't work, he said, well, let's try something else. So they tried increasing wages, bringing the number of hours that people worked down to spread employment out. And this was very important too, because of urbanization, which existed in the early 20th century, late 19th and early 20th century. We just had a lot more people in the cities than we used to, and we didn't have enough industrial jobs for them, given increasing productivity. And so we needed to find ways of spreading this work out to more workers, and we did that through reducing the work week. That takes us to the end of, let's say, World War II. World War II solved the Great Depression because of the incredible demand that it generated in the economy. So the New Deal itself didn't do it. As much money as was spent, it wasn't enough to actually solve the Great Depression. World War II, though, did it. And the United States all of a sudden found itself in a position of global leadership after the French and the British had more or less spent themselves, exhausted themselves and their economies after World War I, the Great Depression, and World War II. And thus began the American century, finally. Thus began the American century. And the American century began with the construction of the Bretton Woods Order, something that was more or less outlined at this ski resort in New Hampshire in the mountains in 1944. The British representative to the meeting was the iconoclastic economist John Maynard Keynes, and the Americans sent Harry Dexter White. And these guys had some very unique and distinctive approaches to economics. One, they predicted that after World War II, the economy would just collapse back into another Great Depression unless a way was found to introduce some permanent demand into it. This was not a message which finance wanted to hear. And they pressured the governments of the United States and the British to ignore Keynes's and White's counsel regarding how to restructure the global economy after World War II. And what happened? Well, the economy went right into a big recession, and it threatened to go into a Great Depression. Now, what this did was it gave American industrialists and British policymakers and U.S. policymakers, it more or less scared them straight, got them religion, gave them their came to Jesus moment, and they decided that they needed to come to John Maynard Keynes and his ideas anyway, he was dead by this point, and move in the direction that he suggested. And of course, as the iconic Tory British Prime Minister used to like to say of the United States always does the right thing, and after a long pause, after exhausting all other options. So here we were at that point, where all of the other options, all of the wrong ones had been exhausted, leaving only the right solution left, and the United States worked to implement it. Thus, we see a system which functioned very well, that system which I described in my childhood in the United States, but one that had built-in contradictions, which would ultimately result in its dissolution, in its dissolving. And I'll describe what those are here very shortly. But ultimately, we had a crisis of sustainability. Like all systems, the second law of thermodynamics and physics, entropy, was at work. The very features which made it successful ultimately crashed it. One was competition from other industrial powers. It was thought after World War II by the Americans that West Europe and Japan could become second-tier producers of industrial goods. They would never compete with the Americans directly head-on, and that this would be a very nice world order in which the Americans led it. Its former enemies would be cooperative partners, producing goods at one level below the Americans. Well, the Germans, the French, and the Japanese had other ideas. They were going to develop their economies, and they did so with amazing speed. First, of course, was Japan. An interesting case to look at is the company of Toyota. In the 1920s and 1930s, Toyota was a manufacturer of textiles. And in fact, the chief export earner for the Japanese at this time was still silk fabrics, making silk stockings for women primarily, but also other kinds of textiles. And Toyota got the idea in its head that it was going to build automobiles. That's a pretty big jump. And economists at the time, especially Americans, told them that they were out of their minds, that this was absolutely crazy. They would never compete with the Americans. The Americans dominated the Japanese auto market. And the Japanese politely nodded and went about the business of building an auto manufacturing industry. Their first car for export in the late 1950s was this one on the left, the Toyopet. And it was competing with these kind of cars on the right from the United States. And the the initial reviews were not good. So after 20 years of working, imagine this now. I mean, American companies, for the most part, are focused on the quarterly return, making sure that every 3 months they deliver a profit statement to their shareholders that show that the company is making money hand over fist. Well, Toyota, working for 20 years, builds this thing, introduces it to the California auto market, and the initial reviews were terrible. One reviewer called the Toyota Pet a cigarette ashtray on 4 wheels. It was a terrible automobile. Now, one would think that the Japanese would give up on this enterprise. But no, they went back to work. And in 20 years hence, so after 40 years of beginning in this enterprise, they hit the U.S. auto market with their fuel-efficient, well-built, subcompact cars at the time of the oil crisis, and they found a product that the Americans wanted and that eventually Europeans would want. And of course, today, Toyota vies with Volkswagen as the largest auto manufacturer in the world. This took a long-term commitment. They made the commitment and they did it. Of course, success was not guaranteed, but if they did not try, of course, they would not have had any chance, right? Well, the other problem was that while the Bretton Woods system was very good at creating prosperity in places like Japan and West Europe, it didn't do much for what we today call the Global South. And so we had all these revolutionary movements, all these anti-colonial movements, and we had people like Che Guevara running around with his exhortation that we have 1, 2, and 3 and more Vietnams in order to crash the American empire. Well, the Americans actually took this very seriously. It was very expensive. It was very much generating instability. And the United States would have to deal with this if it was going to maintain the Bretton Woods system or American leadership. Another problem was that as these American economic competitors began selling their products in the United States, some of them began to develop trade surpluses with the United States. Now, at the end of World War II, it was never envisioned by the Americans that many of these countries would start developing trade surpluses with the United States. The whole problem was, how do we get actual American capital into these economies so they can buy our stuff? Well, by the 1960s, the United States began spending heavily on its war in Vietnam. It was spending heavily on social programs in the United States in order to buy social peace. And it was keeping taxes stable, not increasing them to pay for this stuff. And it was at this time that Charles de Gaulle, who was always fancying giving the Americans trouble when he could, stated that according to the Bretton Woods system and the gold dollar standard, in which the dollar served as the instrument for international trade and confidence was restored to it by backing it at $35 for every ounce of gold. Central banks in this system, central banks from around the world, could demand gold for accumulated dollars. And Charles de Gaulle said, what you're doing is not working. It's inflationary. You're exporting your inflation. We don't think you can maintain your dollar at this value. If you don't mind, we'll take our gold, thank you. This kind of panicked the Americans. And it wasn't that we couldn't afford to pay off the French, but what if other countries began making this demand as well? So this created a crisis. And by 1970 and 1971, the United States decided to just dismantle the very system that it had created, the one which had so successfully created economic development, but also created challenges to maintaining U.S. dominance in the global system. The Secretary of the Treasury under Richard Nixon declared, he was a Texan now, and as you might know, Texans have this kind of very folksy way of speaking, and they're not all like George Bush. In other words, they're not all stupid. Some of them are actually brilliant. Connolly was one of these guys, as is James Baker and a few others. And when they start talking in this kind of folksy, country simple way, you know you're in for big trouble. It's when they really mean business. And Connolly sent his message to the rest of the world regarding all this noise about exchanging gold for accumulated dollars. He said, we had a problem, and we are sharing it with the rest of the world, just like we shared our prosperity. That's what friends are for. And then he said, the dollar's our currency, but now it's your problem. And so essentially, he said, the guarantee, the warranty that you had on the dollar, we're tearing it up. Forget it. It doesn't exist. And so the U.S. just unilaterally moves off this. The global South was now going to be treated very harshly as the next, well, two Treasury secretaries out. Bill Simon from New Jersey, as he said, the global South is going to be dealt with firmly when it wandered from the reservation in terms of the conduct of their affairs. Now, of course, the wording is very interesting. It suggests a United States that viewed the rest of the world as a big Indian reservation, maintained and dealt with in similar fashion when things went wrong. So when the natives caused trouble, well, you know how to deal with them. Now, interestingly, William Simon first applied this new discipline, financial discipline, not to the global South, although eventually they would get it and get it hard, but to the United Kingdom. And so it was in 1976 when the British, under the Labour government of James Callaghan, had problems meeting its balance of payments obligations because the price of oil had soared. North Sea oil was not online yet in any significant quantities. And they came to the IMF for a loan so that they could buy the oil that they needed to run their economy until the North Sea oil came online in larger quantities, and also to modernize their industry. And it was William Simon who told them no. He read them the Riot Act. He said, you're not getting any money unless you reorient your economy away from this crazy idea, as he thought, of modernizing your industry, therefore generating more overcapacity, adding more stuff to the global economy, which means more competition and decreased profits in an environment in which profits were already strained, and instead move towards your comparative advantage in finance, which, as we know, the British did. And today, London in particular is probably the world's largest criminal organization, running the biggest offshore tax haven, which allows capital from the rest of the world to flee the constraints of taxation at home, especially from Russia, and more or less lives off of those rents. Now, there were other problems in terms of restoring profitability and trying to maintain hegemony in the world system. So the United States decided that after a long period of wage growth, that it was now going to take wages down, and it was also going to deregulate the economy. It was also going to work to open up the Soviet bloc. This would serve as a market for Western consumer goods, where, again, there was already overcapacity, and more importantly, flood global markets with cheap energy and colored metals. Well, this made for a very good run in the 1980s and in the 1990s, but the process kind of ends by the 2000s once China and India begin to absorb the surplus of the oil and of the metals go up again. The other thing would be to, of course, drive wages down by offshoring production. And that's where Deng Xiaoping comes into the story. Deng Xiaoping wanted to develop China's economy by having Western companies invest in it. Now, of course, they didn't do this in a laissez-faire manner. The Chinese government maintained quite firm controls over how the process would work. But the United States had really met its match with the Chinese, because the United States was thinking far more short-term in terms of the profits that could be derived from offshoring production, making cheap consumer goods available to the American worker to make up for the fact that their wages were going down, with China's long game. China's long game being the restoration of the Middle Kingdom. The Middle Kingdom, of course, having been in a state of utter chaos for some 150 years, and restoring it to its proper place in the world. Well, the United States obliged and cooperated fully in this game, and thus we see China fully ascendant. Now, Just a brief note on Soviet and Russian views on the United States. In the Glasnost Perestroika period and in the Yeltsin years, the United States, I think, was mostly viewed very favorably by the Soviets and then the Russians. It was seen as a place of great prosperity, and it was, for the most part. It had significant levels of freedom, again, high levels of social mobility. The problem was that Russians tended to view the America that they saw as associated with this guy on the right, Ronald Reagan, and his policies. The problem is that they were actually viewing an America that was the creation of this guy on the left, Franklin Delano Roosevelt. The America that we see today is now the creation of the gentleman on the right and his policies. So they were looking at the wrong guy in terms of the model and the policies to emulate. And they got it wrong. So thus you had figures like Anders Ostlund and other ambulance chasers who arrived on the scene promoting shock therapy policies. And so people were thinking about what did they want? Well, did they want something like communism? Well, the answer at the time seemed to be no. Did they want McDonald's and freedom? I guess they thought for a while maybe yes. And then seeing the outcomes or the results, maybe thought that maybe this wasn't the best thing to have. And so we find ourselves now in an environment in which people are seeking alternatives again, alternatives for a post-global world. But before we address that, just a few brief comments on how the United States solved the problem of this high issue of costs and what it did to solve the problem in addition to, tapping Chinese labor, which was cheap. One could drive wages down to restore corporate profits, which the United States did. But then, how do you maintain demand in the economy? Well, what the United States did, and what some European governments eventually did, and what the Japanese would eventually do as well, would be to make recourse to debt and credit. That's how you would square this circle. That's how you would deal with the issue of increasing productivity, the ability of the economy to produce more goods, and how you're going to actually consume those goods in an economy which is marked by stagnating, if not lowering wages. So the United States first does this with some fairly significant budget deficits, especially during Ronald Reagan's time in office. And then it's going to resort to private credit. And we'll talk more about that in just a moment. It would also financialize its economy, as I said. What this chart shows is the dramatic rise in the financialization of the American economy as represented by corporate profits. And so what you can see here is that roughly around 1970 or so, the end of the Bretton Woods order, finance represented about 15% of corporate profits. Now, we need some financial intermediation in the economy. You can't completely do without banks. But by 2002, this figure rose to 42%. Now, you'd be hard challenged to present a coherent argument for explaining how the financial sector is delivering value commensurate with taking nearly half of all U.S. corporate profits. It can't be done. So finance went from actually serving economic growth to actually becoming a tax on it, from becoming an enabler of a lubricant for economic growth to becoming something like a medieval feudal lord that imposes taxes and returns nothing of value in exchange. Labor discipline would be restored. Here you can see, just in brief, the dramatic reduction in the number of labor strikes that we saw in the United States and European countries in the post-Bretton Woods order and in the beginning of the 1980s. So I think we all know how governments did that. In the United States, it began with Ronald Reagan and the PATCO issue. But getting back to this very central issue of demand and debt, the United States' creation of very, very large public debts, in other words, government deficit spending, or military Keynesianism, which is what Reagan used to power the economy, at some point made the bond markets nervous, and it began to make debt expensive to service, and thus the government had to move to begin to rein it in. This happened under the presidency of Clinton. But this didn't mean that debt went away. It was now just shifted over to the private sector. People were given credit cards. Even students were mailed these things. When I was a student, a graduate student doing my doctoral work, I must have been receiving 4 new credit cards a day in the mail. People were begging me to take their money. Well, people did. People took the money. They built up massive debts. This powered the economy, but it then created a big debt overhang, which people could no longer sustain. The other mechanism by which demand continued in the economy was through asset inflation. So again, if wages are down, how to have productivity gains reflected in the economy in ways which you continue to consume? Well, housing inflation was one of the chief ways of doing it, and inflation in the stock market. Well, ultimately, they reach these dizzying heights. Investors get nervous, they bolt, and we see a crash. So we see this alternating cycle of public and private debt in the era of low wages, which is what we see in the period of globalization. And the only response that governments have following the 2008 crisis, since they are convinced that they can no longer deploy debt as an instrument for generating demand over the long term, is to impose austerity. So we come back full circle to the problem of mature capitalism that we saw in the 1920s and the 1930s, that the horrors of World War and economic collapse finally gave policymakers religion on in terms of countering these trends of mature capitalism, and we return to those very trends. So money was diverted into, again, instead of investments in new innovations which could have transformed the economy, again, wealth was generated by factor accumulation. This is economists' fancy term for putting more hands to work for longer hours. The spatial fix, David Harvey's term for including more areas in the zones of exchange and trade, the post-Soviet bloc being the chief example. And austerity is now the fix, and we see the results in places like Spain, the United Kingdom, Greece. It's very, very unpleasant. We see our infrastructure eroding, so our very investments in maintaining our modern societies are actually eroding, they're atrophying, and we're not doing the things that we need to maintain the modern economies and the middle classes which we built in the last century. Now, how can we get out of this? How can we get out of it? Well, one is to end this financialization of the economy. Probably the most important thing that we could do is to impose significant land value taxes on high revenue generating properties to discourage rents in the speculative real estate and the banking sectors. This would have the advantage of stopping these offshore tax havens because we're losing the money that we need for both investment in our national economies and for infrastructure through this flight. So in Russia, your money goes to Riga, it goes to Ryatumu Banka, it goes to ABLV, it goes to Citadela, and that's where your oligarchs send their cash. That means you lose the ability to tax it, and you don't have it at home available for taxation. Well, the current system doesn't allow you to stop that, because accountants can go to work on any set of books and make it appear as though you don't have any money. But a property, of course, as we know, is different. It's a physical asset. It's a physical asset. You can't move it. It has an address. You can create modern land value maps which ensure that these kinds of properties are taxed and taxed fairly heavily. And therefore, you would collect taxes from many of the people who, arguably came by their fortunes in the in probably ways which are somewhat dubious and that we don't necessarily approve of. So you could actually capture some of that wealth back, which could then be reinvested back into society and our infrastructure, our education, our bridges, our roads, our schools, maintaining our parks, etc. This would increase demand in the economy, thus promoting industrial development. So this is a very important thing to do. In places like the European Union, with Article 123 of the Lisbon Agreement, where they have this, to my mind, absolutely insane stipulation that governments, well, it's part of the whole euro, that they can no longer have private, rather public money creation. Have to end this idea that you can only have private credit creation. You know, right now, money is created by bankers on computer keyboards like mine. And then, of course, they extract a tax from you, which doesn't return any value to you. Governments need to restore themselves as the power that issues currency, that issues money, and that has control of the keyboards and that controls currency. And this is very, very important, because we need to remove this rent of private credit creation. We also need things like a Tobin tax, of course, on financial transactions, so that we slow down the speed of financial transactions, especially these idiotic computerized transactions that make money on just speed of trading rather than actually imparting any kind of value through suggesting that you're betting on a particular company doing better because of its economic fundamentals. So these are the kinds of things that we could do very, very quickly. Technically, they're very easy to do. The challenge is only political. And we need to return to the kind of Keynesian idea, but we need to go beyond basic or simple Keynesianism politically. But we need to return to this kind of Keynesian idea, and this even pre-Keynesian idea, that national development is what creates the most opportunities for economic development and for the social advancement of people. I'm not advocating autarky. Again, it was national development during the Bretton Woods period, for instance, that actually led to record levels of international trade. So the idea was that if you encourage national development, countries then have something to make, they then have something to trade. So these are some of the basic things that we could do to move forward. We also need to begin investing heavily in research and technological innovations that return us to the area of innovation and growth through revolutionary developments in the economy and in production, rather than just adding more hands at ever lower cost. We have to remember that we're still living off the equity of some of our major investments from several decades ago. What we could use are big projects again, like space projects. I know this sounds far-fetched, but it sounded far-fetched in the 1960s too. I mean, we're living off of the innovations that were created, for instance, in the American space program in the 1960s. The microprocessor in this machine is essentially the result of the Americans' desire to get into outer space and to get a computer into outer space, because they used to be the size of this room and they required another room full of air conditioners to keep them cool. You could never get that into space. This you can. This never would have been developed by the market. Well, this would, the whole machine, but not the microprocessor. And if we have these kinds of big projects again, they're going to be delivering monumental technological challenges, which we will have to solve. And in so solving them, we're going to come up with all sorts of wonderful innovations that we could not anticipate in advance. So we need vision again. And we need to have a vision of an economy that's based on modernization, innovation, social good, the reproduction of the middle class, security for people's basic needs. And then again, this sounds kind of counterintuitive, but we know from the actual data that when you provide people with the basic needs, such as healthcare, pension systems, if they're not always worried about these things, they actually are more dynamic and enterprising, and they launch more businesses. So for instance, Italy right now, and many European countries, have a higher rate of per capita business startups than the United States. Why? Because in the United States, everyone's worried about losing their health insurance. They're worried about how they're going to pay for their kids' college education. They're worried about how they're going to retire. And so they're very conservative. They're no longer entrepreneurial. They're afraid to leave their jobs. But in those countries that have all these social supports, they start businesses all the time at the drop of a hat, because there's very little risk to doing so. So again, by having a much stronger social state, you actually have a much more entrepreneurial, dynamic economy, which results from it. So in sum, I would say that the American century was long in the making, but short in duration. That we need a post-globalized world with economies geared towards national economic development, tax policies that capture the revenue for social and fiscal infrastructure, and redirect labor from largely unproductive tasks and these ridiculous creative industries, so-called creative industries, which just keep people busy at keyboards all day doing I'm not sure what, to more important social needs. We need some minimum income guarantees that work to lift all wages and restore demand in the global economy. And again, we need big visionary projects such as space exploration, again, to serve as incubators for technological development. So those are just a few thoughts to consider about the end of the American century and the way forward. Thank you very much for your attention, and I guess we can take some questions.